You've been lied to about what makes a profitable trader. Everyone tells you to work harder, study more charts, follow more indicators, master more strategies. So you do. You grind for 12 hours a day, you backtest hundreds of setups, you join every trading room, buy every course, chase every signal, and somehow you're still bleeding your account. Here's what nobody tells you. The most consistently profitable traders I know don't trade more. They trade less. They don't know more setups. They master fewer. They don't chase perfect entries. They accept imperfect ones. Because trading isn't about transformation, it's about tiny invisible habits that compound over years. In the next few minutes, I'm going to show you 8 micro habits used by traders in Japanese prop firms. Habits so small they seem irrelevant, that create the kind of edge most people spend a decade searching for. Not because they're complicated, but because they're so simple that 90% of traders dismiss them. And by the end of this, you'll understand why the trader who improves 1% daily will always outlast the one chasing 100% gains, and exactly how to become that trader starting today. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. The first habit is called Kaizen, and if you understand this, you'll never chase a new strategy again. Kaizen means continuous improvement, but not the kind where you blow up your account, panic, and then spend 3 weeks watching YouTube videos trying to find a completely different system. It's the opposite. It's about identifying one microscopic friction point in your current process and eliminating it. That's it. One thing, not 10, not a complete overhaul. 1. Here's what this looks like in practice. You notice you're consistently entering 2 pips too early on your breakout trades. Not sometimes, consistently. Most traders would ignore this because 2 pips feels insignificant. But over 100 trades, that's 200 pips of slippage. Over a year, that could be the difference between a profitable system and a break-even one. So you adjust. You move your entry trigger 2 pips further. You test it for a week. You measure the result. That's Kaizen. Or maybe you realize you're taking 30 seconds too long to pull the trigger after your setup appears. And by the time you click, the edge is gone. So you don't rebuild your entire psychology, you just set a timer. 5 seconds to decide. Yes or no? Execution becomes mechanical. 1 tiny adjustment, 1% better. The power of this isn't in the individual change, it's in the compounding. Because when you make 1 small improvement every single day, you're not the same trader at the end of the year. You're 37 times better. That's not motivational math, that's exponential growth. 1.01 to the power of 365 equals 37.7. But here's the problem. 1% worse every day, and you decline to nearly 0. Most traders are doing the latter without realizing it, because they never sit down and ask, what's the one thing I can tighten up today? This is your daily review habit. Every evening, you don't open TradingView looking for a new indicator. You don't scroll Twitter for someone else's setup. You open your journal, you look at today's trades, and you ask one question. What's the smallest thing I can improve tomorrow? Not 5 things. 1. And you do that every single day until it becomes so automatic you don't even think about it anymore. Then you find the next thing. The second habit is Ikigai, and this is the reason most traders quit before they ever get profitable. Ikigai is your reason for being in the markets, not your P&L, not your profit target. The deeper reason that makes you want to show up even when you're in a drawdown. Because here's the reality. If you're only trading to make money, you will quit. You'll quit the moment the money stops flowing. You'll quit the moment your strategy hits a rough patch. You'll quit because there's no foundation beneath you. I've watched traders force themselves to scalp because they heard it's the fastest way to grow a small account. They hate every second of it. The stress makes them nauseous. They can't sleep. But they keep doing it because they think that's what they're supposed to do. And then they blow up. Not because the strategy didn't work, but because they were trading something that violated who they are. Ikigai sits at the intersection of four things: what the market offers you, what you're actually good at, what you enjoy doing, and how you can get paid for it. Let's break that down. The market offers a lot of things: trends, reversals, breakouts, ranges, volatility expansion, consolidation, but you're not good at all of them. Maybe you're exceptional at reading momentum, but terrible at catching reversals. Maybe you thrive in high volatility environments, but get chopped up in sideways markets. That's fine. The goal isn't to master everything. The goal is to find the one thing you're naturally aligned with. Then you ask, do I actually enjoy this? Because if you love the hunt of a breakout, if you love the patience required to wait for a perfect range setup, if you love the speed of scalping, that enjoyment isn't a luxury, it's fuel. It's what keeps you going when your win rate drops for 2 weeks straight. And finally, can I get paid for this? Not every edge is tradable at every account size. Not every strategy works in every market condition. So you need to find the overlap. When you find that intersection, that's your Ikigai. That's the strategy you stop drifting away from. You stop joining every Discord group. You stop buying every course. You stop switching systems every time someone posts a winning trade. You build your process around what you're good at, what you enjoy, and what actually works, and you commit to refining that one thing for years. Most traders never do this. They just drift. They trade what's popular. They chase what's working this month. And they wonder why nothing ever sticks. So pause right now and ask yourself, what part of trading do I actually enjoy? What market condition do I read better than others? What's my natural timing, fast or slow? You don't need all the answers today, but if you start asking the questions, clarity will come. The third habit is Hara Hachi Bu. And this might be the simplest risk management rule you'll ever hear. Hara Hachi Bu means eat until you're 80% full. In trading, it means never use your full buying power. Never max out your leverage. Never go all in, even when you're certain. Here's why this matters. Your brain takes about 20 minutes to register that you're full. In trading, your brain takes about 20 minutes to register that you're over-leveraged. By the time you feel the panic, by the time your heart starts racing, by the time you realize you can't handle the heat, you're already in too deep. You've already consumed more risk than your nervous system can process. And now you're not trading. You're surviving. You're in fight or flight. Every tick against you feels like a threat. You start moving your stop loss. You start adding to a loser. You start making decisions from a place of fear instead of logic. But if you stop at 80%, if you leave 20% of your capital, your leverage, your emotional capacity in reserve, you give yourself room to breathe. You give yourself the ability to handle an unexpected move without triggering a stress response. You stay in rest and digest mode instead of fight or flight. And that changes everything, because the trades you take from a calm state are fundamentally different from the trades you take from a panicked state. This is your risk management protocol. Before you enter any trade, ask yourself, if this goes against me, will I still have room to think clearly? If the answer is no, you're risking too much. Cut it by 20%. Most traders eat on autopilot. They size up because the setup looks good. They add leverage because they're confident. And they don't realize they're already full until it's too late. So the next time you're about to enter a position, pause. Check in. Could I handle this going 30% against me and still stay rational? If yes, take it. If no, size down. It's not about restriction. It's about awareness. The fourth habit is Shinrin-Yoku, and in trading we call this market bathing. This isn't about watching more charts. It's the opposite. It's about intentionally stepping away from the screen to reset your nervous system. In Japan, doctors prescribe forest bathing. They tell patients to spend time in nature, not as a metaphor, but as medicine. And the science is clear. When you step away from digital noise, your cortisol drops, your blood pressure lowers, your decision-making sharpens. But here's what happens to most traders. They sit in front of 6 monitors for 10 hours straight. They watch every tick. They refresh their P&L every 30 seconds. They check Twitter between trades, and their nervous system stays locked in fight or flight mode the entire time. Cortisol stays elevated, heart rate stays high, and every decision they make is filtered through stress. So they revenge trade, they overtrade, they chase, they exit winners too early and hold losers too long, not because they don't know better, but because their biology is hijacked. Shinrin-Yoku is your post-trade recovery protocol. After a big win, you walk away. After a big loss, you walk away. You don't sit there and process it by staring at the chart. You don't try to make it back immediately. You physically leave the desk. You go outside. You take 10 deep breaths. You let your parasympathetic nervous system activate. You shift from fight or flight back to rest and digest. And only then, only after your body has reset, do you come back and evaluate the next opportunity. This isn't wasted time, this is recovery. And in a game where emotional control is the edge, this might be the most important 20 minutes of your trading day. You don't need a forest. You just need distance from the screen. No phone, no notifications, just space. And when you come back, you'll see the market differently. Because you're no longer reacting, you're responding. Now, if you're finding value in this, do me a favor, hit that subscribe button and turn on notifications. This channel exists to give you the silent edge most traders overlook. The kind of insights you won't find in the hype-filled trading rooms. So if you want more of this, subscribe now. And let's keep going. The fifth habit is Wabi-Sabi, and this will completely change how you execute trades. Wabi-Sabi is the acceptance of imperfection, the understanding that beauty exists in things that are incomplete, impermanent, and flawed. In trading, this means accepting that a perfect setup doesn't exist. The textbook trade you're waiting for, the one with every confirmation aligned, the one that looks clean and obvious, that trade rarely comes. And when it does, it's usually already moved. Here's what happens to perfectionists in trading. They wait. They see a breakout forming, but the volume isn't quite right, so they wait. They see a support level holding, but there's no candlestick confirmation yet, so they wait. They see momentum building, but RSI isn't oversold enough, so they wait. And by the time every single box is checked, the move is over. They missed it. Not because they didn't see it, but because they were waiting for something that doesn't exist. Perfection. The best traders I know take ugly trades, trades that look messy on the chart, trades where the setup isn't clean, trades where one or two things are off, but the core thesis is intact. They take these trades because they understand that the market is chaos. It's not textbook. It's not clean. And if you wait for every condition to be perfect, you'll spend your entire career waiting. This is your execution mindset. You stop chasing airbrushed setups. You stop comparing your live trades to the cherry-picked examples in courses. You start appreciating the cracks, the noise, the uncertainty. Because a messy trade that follows your rules is infinitely better than a perfect trade you were too scared to take. The goal isn't to find the flawless entry. The goal is to take the entry that's good enough, manage it well, and move on. The sixth habit is Gaman, and this separates amateurs from professionals. Gaman means enduring difficulty with dignity. It's the ability to sit through a losing streak without complaining, without blaming, without broadcasting your struggle to the world. Now in the West, this might sound like toxic positivity, like just swallow your pain and keep going. But that's not what Gaman is. Gaman isn't about denying your pain. It's about not letting your pain control your behavior. Here's the reality. Every single trader goes through drawdowns. Every single profitable trader has losing months. The difference is how they respond. The amateur logs into Twitter and complains about market manipulation. He blames the broker. He blames the news. He posts screenshots of his losses looking for sympathy. And every time he does that, he reinforces the story that he's a victim. He strengthens the narrative that trading is happening to him, not that he's an active participant making decisions. The professional sits with the discomfort quietly. He reviews his trades. He checks if he followed his rules. If he did, he moves on. If he didn't, he notes it and adjusts. But he doesn't need an audience. He doesn't need validation. He just needs to keep showing up. That's Gaman. It's the quiet strength that says, this is hard, but I can handle it. I don't need to announce it. I just need to endure it. This is your psychological resilience. You accept that difficulty is built into the business model. Losing streaks aren't anomalies, they're part of the statistical distribution. And when you stop seeing them as something wrong, when you stop needing external validation every time things get hard, you become unshakable. You stop quitting when it matters most. The seventh habit is Kintsugi, and this might be the most important one. Kintsugi is the Japanese art of repairing broken pottery with gold. When a bowl cracks, they don't throw it away. They don't hide the damage. They fill the cracks with gold, and the piece becomes more valuable than it was before. In trading, this is your journaling practice, but not the kind where you just record your wins. The kind where you highlight your losses, your blown trades, your emotional mistakes, and you extract gold from them. Most traders treat their losses like shame. They close the trade, they feel the pain, and they move on as quickly as possible. They don't want to look at it. They don't want to relive it. But that loss, that mistake, that's where the real learning is. That's the crack that, if you fill it with analysis, with honesty, with lessons, becomes the gold that makes you a better trader. Every blown account I've had, every major loss, every moment where I acted like an idiot, those aren't failures I hide. They're the foundation of everything I know now. Because I didn't just lose money, I studied why. I went back and asked, what was I feeling? What was I thinking? What rule did I break? What can I do differently next time? And I wrote it down. I made the crack visible. And over time, those cracks became my edge. This is your golden journal. You don't just log trades, you analyze them, especially the bad ones. You turn every mistake into a lesson, every loss into wisdom. And when you do that consistently, you stop fearing losses. You start seeing them as tuition, as the price you pay to become the trader you're meant to be. Your scars aren't something to hide, they're proof you survived. And the gold you fill them with is what makes you valuable. So here's what you need to understand. These 7 habits aren't hacks. They're not shortcuts. They're principles, and principles take time. But when you apply them consistently, when you let them compound, they don't just make you a better trader. They make you a different kind of human. Calm, focused, resilient. Someone who doesn't break under pressure because you've already broken and rebuilt yourself with gold. And that version of you is unstoppable. So let's bring this full circle. You clicked on this video thinking you needed more strategies, more indicators, more screen time. You thought the answer was out there, hidden in some complex system you haven't learned yet. But now you know the truth. The edge you've been searching for isn't complicated. It's not exotic. It's not locked behind some premium course or exclusive trading room. It's in the 1% daily improvements you make through Kaizen. It's in finding your Ikigai, the trading style that actually fits who you are instead of who you think you should be. It's in the 80% rule that keeps you calm when everyone else is panicking. It's in stepping away from the screen when your biology is screaming at you to keep trading. It's in accepting that perfect setups don't exist and taking the imperfect ones anyway. It's in enduring drawdowns with dignity instead of desperation. And it's in turning your worst losses into your greatest lessons, filling those cracks with gold instead of shame. The traders who survive, who actually build wealth over years, aren't the ones grinding harder. They're the ones refining quieter. They're not chasing transformation. They're building it, one invisible habit at a time. And over the course of months and years, those tiny choices compound into something most people will never achieve. Consistency. You don't need to adopt all 7 tonight. Pick one. Let it become part of your process. Let it settle into your nervous system. And when it's automatic, add another. Because real profitability isn't built in a week. It's built in 1,000 small decisions that nobody sees. And now you know exactly what those decisions look like. If this changed how you see trading, you know what to do. And if you're ready to go deeper, I'll see you in the next one.